You normally have to wait until Boxing Day to pick up a bargain at one of the big retailers. But local private equity mob Anchorage has jumped the queue and snapped up David Jones. It's reportedly paid $100 million for the 184-year-old department store. That's a mighty big discount to the $2.1 billion South Africa's Woolworths forked out just 8 years ago. The South Africans may claw back a little more once its Melbourne property is sold, but after already writing off more than $1 billion, the 2014 purchase has been nothing short of a disaster. Times have been tough for retailers and particularly department stores. Just ask anyone who bought Myer shares in the 2009 listing. They're nursing losses of 82%. And with interest rates starting to bite, life's about to get even harder. ANZ's consumer confidence measure was down again this week and now sits at 82.5 points. That's 30 points below the long-term average, and remember, anything less than 100 isn't good. But it's the shift to online shopping that's really hurt department stores, as this graph of credit card spending shows. It was a trend even before the pandemic, but we're handing far less plastic across the counter these days. On the local market, stocks tumbled in late trading after the Bank of Japan, the last central bank to maintain ultra-low rates, shocked traders with an unexpected surrender. Construction group Johns Lyng led the charge, while real estate listing groups Domain and REA also headed south, as energy stocks held firm. Tokyo stocks took a dive, while Wall Street continued to grind lower. Meanwhile, the Aussie dollar fell sharply against the yen and was mostly weaker against other currencies. Commodities were also mostly lower as traders try to figure out what's happening in China. And that's finance.